Tamil Nadu Dr. Ambedkar University has been conducting many more academic as well as co-curricular activities under the able administration of our Honorable Vice Chancellor Dr. N.S. Santhosh Kumar sir. I take this opportunity to thank our Honorable Vice Chancellor sir, Dr. N.S. Santhosh Kumar sir, and respected Registrar sir for giving the permission and support to conduct this webinar. I welcome the faculty members of the Tamil Nadu Dr. Ambedkar University and the students of School of Excellence in Law, the Tamil Nadu Dr. Ambedkar University, and participants from different institutions and different states also. I welcome the participation from industry domain also. Importantly, on behalf of the Tamil Nadu Dr. Ambedkar University, I welcome today's speaker, resource person, renewed chartered accountant, Mr. Sivaramakrishnan sir, Chief Executive Officer, Syndication Company Limited, Chennai, Consultancy and Investment Portfolio Management Company. Sivaramakrishnan sir has worked in many corporate abroad. Sir has got international exposure also in the field of finance in general and fundraising and investment in particular. All of us are suffering from financial stress. When I met resource person, Dr. Chartered Accountant Sivaramakrishnan sir explained, invariably all of us are suffering from financial stress. So how to remove the stress, how to come out of the stress. I am very much delighted today that we have a right person to talk about the right topic. And certainly sir is going to enlighten all of us as to how to manage personal finance so as to come over the financial stress. So with this introduction, I request Sivaramakrishnan sir to proceed his presentation.
Thank you. Thank you, Velmurugan. Is my voice audible there? I'm not able to hear you. Is my voice audible? Velmurugan, is my voice audible there?
Sir, we can hear you, sir.
Okay, fine. Thank you. Thank you, Velmurugan, for this brief introduction. It's a pleasure to interact with the student community and the teaching community of this reputed institution, and with the other participants who have come and joined from different parts of India and from diverse backgrounds. As Velmurugan sir just described, there is a lot of financial stress all around, isn't it? It's not a nice thing to start with the word stress when you start a lecture, but I think that's what it is, isn't it? When you go to the doctor, you don't go to the doctor to share something very sweet. You go to the doctor to share your pain and get it relieved, right? So I'm not a doctor here from medical context, but we're all financial doctors, so-called financial doctors, where we solve a lot of financial problems. We solve financial problems and take care of the financial well-being of several hundreds of families spread across different parts of India. Well, one may say that, well, I don't have any problem. If what I have a problem, I need to go to the doctor. If I don't have a problem, then why do you need to go to the doctor, isn't it? That's a very logical question, right? So let me tell you something very interesting. Until you go to the doctor, you never know that you got a diabetes, right? Until you test, you never know that you got a diabetes. Would you agree with me? I hope this is not going to be a monologue. I wish the participants could also join, probably by saying a few words on the chat box, or perhaps, but I don't know if somebody can unmute themselves and talk. I don't know if it's permitted in this conversation, but I always like to engage in a discussion rather than being a monologue, right? So until you go to the doctor, until you go and test yourself, you wouldn't know that you got a diabetes, right? Likewise, BP and so on and so forth. Everybody has got a financial problem. And this problem exists for almost as much as 80 to 90% of the society at large. It's very interesting that most of the people do not know that they got a problem. That's the best part. And when they come to know about it, they come to know about it. They come to know about it when at the point of retirement, or the point of meeting some important financial goals in one's life. For example, children's education or children's marriage. It's only at that particular point in time that they come to know that they got a financial problem to attend to. Until that point in time, they live on their earnings. Today there's no problem. Tomorrow there's no problem. Month end there is a salary to work upon, right? And you're all students. You don't have any problem on hand. So what's the need to worry about? What's the need for a stress? There's absolutely no stress at all, isn't it? Life is beautiful, right? That's what people think. But the challenge is that why do people, all of us, work very hard? People work very hard, isn't it? Don't you see your parents working hard? Don't you see your teachers working hard? Don't you try to work hard? The purpose of working hard, is it all fun? Well, of course, it should be fun, but more than that, the purpose is to earn a corpus, right? Earn money and create a corpus. But more often than not, that is what happens usually is that people work a lot and earn a lot of money, but they don't end up creating a corpus. So there is a difference between earning and creating a corpus. Do you understand what I'm saying? There is a very big difference between working hard and earning money and creating a corpus. So, the society helps us to, the teaching education system today builds character in us, isn't it? It's supposed to build character in us. Whether it happens or not, it depends on the individual's system. But education system is supposed to create good character in us. And besides that, it gives us a particular skill set. It could be, in your case, you're going to become a lawyer, right? In my case, I'm a chartered accountant. I'm taught finance. Likewise, doctor, so on and so forth. So all of us are taught a particular skill set with which we can work, we can earn money, and create a corpus. So ultimately, finally, it comes to the point that the purpose of all these things, all these exams, studying, working hard, going to institution, going to college, listening to lectures. In fact, the reason why you also come here today to listen to what I'm going to talk about is the ultimate purpose is to create a corpus. Would you agree with me? The corpus could be useful for, your marriage. It could be useful for your education, further education. It could be useful for your retirement, right? It could be useful for going on a European trip, right? It could be used for fun, to buy a lot of things in life, right? So the point that I'm alluding to is that the purpose is to create a corpus, but what happens in the society today, we manage funds of about 550 families odd from different parts of India. What we have learned is that people work hard and earn money, but the corpus does not create it given the fact that they are very good at earning money, but people are very poor at managing the money earned, right? Managing the money earned to create a corpus, right? As a result, the corpus does not get accumulated. The end result, we see people in the society working until the age of 60, 70, 80, right? Don't you see your family members working, some of your family members working till about 70, 80? There is a beautiful saying in Tamil, if you are contented, the life is happy, right? That's a beautiful saying in Tamil. So being contented is all okay. It's a mirage. What is being contented, right? All that is fine, but at the same time, we need to have the means to be able to survive through our livelihood, right? So the purpose is to create a corpus. Somebody reads on and on and on, but doesn't take an examination at all. The purpose is to take examination and pass exam, isn't it? Likewise, the purpose of all this exercise is to create the corpus. Therefore, to create a corpus is what we're going to talk about, right? So here I'm going to share with you some very interesting ideas, which I have learned. Nobody taught me all these things. In fact, the chartered accountancy course did not teach me these things. These are all learning that I have had during my journey in the last 21 years of working in different parts of the world, in meeting a lot of people, and understanding things, and that's what we practice today. That's our profession. We manage about 600 crores of corpus across different asset classes, right? So I'm going to share certain very, very, very important secrets with you. Bear in mind, my friends, these are the secrets of creating and multiplying wealth. No, you may attend your college for any number of years, you may take courses of whatever kind it is, but none of it will teach what I'm going to tell you today, what I'm going to talk about today. Therefore, pay all your attention and miss any of it at your own risk, because whether your education system will teach you to become rich or not, this will help you become rich in society. And that's a secret that I'm going to talk about. Therefore, my friends, welcome to this discussion on financial awareness and wealth creation. Well, let's quickly understand the purpose of all this employment is to have financial freedom, isn't it? Financial freedom is nothing but you don't think about the tough parts of I need to go to office today in the morning, I need to go to college today, right? You don't want to think about all these things in life. You want to lead a happy life, right? So the purpose is to have financial freedom. Now, let me quickly run you through a few ideologies, right? Before I talk about the secrets that I'm going to reveal to you today. What's our goal? The entire goal of people, if it boils down to one single factor, I think you'll agree with me. Wouldn't you agree with me? People want to retire today at the age of 45. I think many of us, many of these youngsters, many of people like you, tell me that they want to retire at the age of 35. Hey, come on, at the age of 35, would you retire? That's what people tell me. But end result, they don't know what it takes to retire. They think that some people come and tell me that, let's say, the monthly expenses for running a family, looking at their own parents, let's say, is 40,000 rupees. So they multiply 40,000 into 12, making it about 4.8 lakhs, and 4.8 lakhs into about 40 years of retirement. So making about 4.8 lakhs into 40 times, right? They think that that's sufficient to take care of their entire retirement. That's about just about 1.8 crores. If one thinks that 1.8 crores, if you have on hand today, you could retire, my friends, you're terribly wrong. You know why? There is an aspect called inflation. What does it mean? If you're going to be buying some vegetables today on you're at home today, you're going to step out to the shop and buy some vegetables for 100 rupees. You go to the same shop, buy the same set of vegetables next year. How much would it cost? It would cost nothing less than 100, but it actually would cost more. It would cost about 110 rupees odd, isn't it? Therefore, in the following year, it costs more. So therefore, all expenses that you're seeing today will tend to increase over time, right? The expenses will tend to increase over time. Therefore, it's important that 40,000 rupees of expenses today is equivalent to about 1 lakh rupees of expenses for the same livelihood, same cost of living, same standard of living. For the same standard of living, 40,000 today is equivalent to about 1 lakh. How long would it take to become 1 lakh? It's going to take about 10 years' time. In 10 years' time, the cost of living will go by anywhere between 2 times to 3 times, right? So 40,000, 10 years later could be 1 lakh. And in about another next 10 years, following 10 years, and the end of 20 years today from now, it's going to become as much as 2.5 to 3 lakhs per month. Your 40,000 rupees of expenses is going to be about 2.5 to 3 lakhs per month, 20 years down the line. Now the question is, how are you going to build a corpus? Are you going to have pension? Are you going to be employed in a government college? Even the professors working at Ambedkar University do not have pension, isn't it? The ones who joined last few years wouldn't have any sort of pension. So therefore, given that there is not going to be pension, and you're not in agriculture where there is a perennial income. I don't know if there is perennial income in agriculture or not, but I guess actually they're not. Assume for a moment it's there, but you're not in agriculture. Therefore, there's no perennial income. There's not going to be anybody who's going to support you for retirement. So you got to create a corpus for yourself for retirement. And that corpus, when you calculate, is not your monthly expenses in 12 months multiplied by so many number of years. It's something much, much, much more than that, because of the fact that there is an element called inflation, which is lying underneath, doesn't reveal itself. So people end up retiring at the age of 60, 70, 80. In fact, many of them do not retire at all. They continue to work forever, given the fact that the money that is required is more than what they are earning or what they have on hand. Well, let's look at it this way. Our education system makes you a lawyer, makes you a doctor, makes you a chartered accountant. But fortunately, unfortunately, in fact, it's unfortunately, none of our education systems, be it chartered accountancy always, chartered accountancy also, forget law for a moment. Even chartered accountancy does not teach us as to how to achieve financial freedom. But the objective of all employment is to achieve financial freedom. Do you agree with me? But our system does not teach us. This is something that we need to inculcate. And what I'm going to show you is the vistas of what you need to do in your life to achieve financial freedom for yourself and for your family. Therefore, listen carefully. These are the three important things that we do in our work, which is, these are the three important goals. Achieve financial freedom for families. Number two, preserve the hard-earned money of people and grow that money, multiply that money for posterity meaning for the generations to come. These are the four important things that we do to grow and multiply corpus. So who are we? This is what we are, my friends. Quickly speak here. There are three. We are one of the large family offices in South India. We manage financial affairs of several hundreds of families from different backgrounds. There are three aspects to our work. The first aspect is that we manage money. Number two, we can see that as wealth creation over here. Number two is the aspect of investment banking, where we raise money for a lot of families. We from different varied forms and help them grow their business. Number three is we manage the risk of families, provide the proper risk cover for them. So as we move forward, you'll understand that as you progress in your life, I think there are lecturers who are sitting here. Besides creating and growing money, multiplying money, all that, there is also a need to do some simple things in life, such as write a will. When you've got a property, when you got some assets for yourself, when you are beyond 50, it's very important that you write your own will, right? Write your own will. Now, expert financial advisory for managing money, growing money, risk management, corporate finance, investments in all different forms of assets is what we do. So therefore, my friends, I'm going to come to something very important here. So pay attention to whatever I'm saying from here on. Well, this is a very, very important element in understanding what wealth creation is all about, what financial awareness is all about. These are very wonderful principles. If you understand these principles very well, let me tell you that you'll have financial awareness in life. Well, I read this about 12 years back. Velmurugan sir, could I request a participant or somebody over here to read this aloud? Is it possible?
Let me read, sir. So compound interest is the eighth wonder of the world.
Myself.
He who understands it earns it, and who does not pays it.
Is it possible that we could ask somebody to read it aloud? So I'm going to read this aloud, my friends. Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't understand pays it. Doesn't it sound very simple? It's actually very simple, but there is some very, very deep meaning lying inside these golden words. Who said this? It was said by none other than Albert Einstein. Right? My friends, I read this about in the year 2008. Until then, my life was different. But after reading this and after understanding this particular sentence and implementing that in life, my life changed over completely. Over here, let's understand what he's saying. So the man who talked about component, when I read this, I read this when I was traveling back from a flight from Singapore to Chennai. And, compound interest is a simple subject, a simple thing that we keep reading, we keep working on in chartered accountancy. But I never thought that something like an eighth wonder of the world is something so important. So to understand what it is, I made some calculations. Let me show you these calculations. Then I'll come back to what compound interest was all about. But let me tell you what compounding is first of all. Let's say you got about 100 rupees on hand. If your 100 rupees is placed in a fixed deposit or placed somewhere and it is growing at about 8% per annum. Let's say 8% per annum. The next year it becomes, let's say it's growing at 10% per annum. Then growing at 10% per annum, 100 becomes 110. Right? Now the following year, 10% applies, if it applies on 100, then it's called simple interest. But if it applies on 110, then it is called compounding, right? When it applies on 110, the end of second year, 10% on 110 makes it 121. But if the 10% is applied on 100, end of second year, the corpus becomes only 120. You see the difference? It's only 1 rupee starting at the starting point, right? But you know what happens after that? It's something astounding. So you got the point? Simple as சொல்லணும் அப்படினா தமிழ்ல சொல்லணும்னா வட்டிக்கு வட்டி தான் compounding. முதலுக்கு மட்டும் வட்டினா simple interest. If the interest rate applies only on the principal, then it's called simple interest. If the interest rate applies on the amount that has grown already, then it is called compounding. When you go to banks, when you go to institutions, what we all talk about is only compound interest rate. It's called compounding, right? Now let's go into something very interesting. See, let's look at it this way. About 500 years back, the grandfather somewhere deposited this 1 rupee. That's his investment. He invested somewhere. And the place where he invested, the money is growing at, you can see at the bottom, 3% per annum. Right? It's growing at 3% per annum. There is somebody else, grandfather, whose money is growing at 4% per annum. And then comes 5% per annum, 6% per annum. So you see the point. The growth rates are 3, 4, 5, and 6%. So these are all compounded interest rates. So 500 years back, it was 1 rupee. After 500 years, what do you think will be the value of that 1 rupee? If it is growing at 3% per annum, can somebody think over and share your thought? What if the money is growing at about 3% per annum? What will be the value of this 1 rupee if it is growing at 3% per annum? The value of that 1 rupee is as much as 17.85 lakhs. Can you believe that? After 500 years, 1 rupee is equal to 17.85 lakhs. If it is growing at 3% per annum, that is 1 rupee becomes 1 rupee 3 paisa, and 3% applies on 1 rupee 3 paisa, so on and so forth. Now, what if the money grows at 4% per annum? We talked about 3%, right? It grows at 4%, what happens? What will be the corpus at the end of 500 years? You know how much it could be? Just think over. It has become about 17 lakhs at the end of 500 years, growing at 3%. What could be the corpus if it has grown at 4% over a period of 500 years? You know what? It could be as much as 19 crores. When we ask people, they tend to talk about numbers like about 25 lakhs, 30 lakhs, because end of growing at 3%, the corpus grows to about 17 lakhs. But if it grows at 4%, it's not going to be something like 25 or 30 lakhs, but it's as much as 19 crores. Can you see the difference there? Huge, huge, huge difference. What will be the value of this corpus if it grows at 5%? Would you think over? It's going to be a much larger number, isn't it? The value of the corpus is going to be, would it be about 500 crores, 600 crores, 1000 crores, or 50 crores, right? You know what the corpus is going to be if it grows at 5%? It's as much as 2000 crores. Can you believe that? At 5%, the corpus has grown to 2000 crores. Can you believe that? 3% is 17 lakhs, 4% is 19 crores, and about 5% it's grown to as much as 2000 crores. So what will be the value of the corpus? If it grows at 6%, please remember that the initial investment amount is only 1 rupee, right? It's only 1 rupee. Now growing at 6%, what could be the value of the corpus? Could it be about 3,000 crores, 5,000 crores, 10,000, 50,000 crores? Is more than that. Could it be 75,000 crores, 1 lakh? No, it's more than that. Come on, what are we talking about? Huge numbers is what we're talking about. It's as much as 2 lakh crore rupees. At 3%, it's 17 lakhs. At 6%, it's 2 lakh crore rupees. Can you believe that? The starting point is the same 1 rupee. You see what kind of difference that we're not talking about a difference between 3% and 30%. We're talking about a difference between 3% and 6% only. Look at the difference that it has made. Phenomenal difference that it has made, isn't it? Therefore, please understand that every incremental percentage growth in your life, in the corpus that you earn, will make a substantial difference over a long period of time. This is something that you need to understand. Well, when I had a presentation on this subject sometime back, several years back, once somebody asked me a question. We talk about 500 years, but what could happen in only 30 or 40 years? Because our lifespan, our working span is going to be 30 years only, right? So let's put it this way. It's something very important. If you understand this properly, then you will start understanding the secrets to creating and multiplying money, right? Let's say you and me start our career today, right? We come out of college and start our career. We are earning the same amount and we are investing the same amount. But where we invest is different. We are investing in a place where your money is growing at about 13% per annum. That is 13% per annum. Wherever I am investing, the money is growing at about 7% per annum. You get the point? We're investing in a place where the money is growing at 13% every year. I'm investing in a place where the money is growing at as much as it's only growing at about 7% per year. You see the difference? Now, growing at 7% per year, after 30 years, you have accumulated corpus. You have created a corpus. Somebody growing at about 13%, 7%, you have created a corpus of as much as 1 crore. Growing at 1.7%, you have created a corpus of as much as 1 crore. Now, growing at 13%, you know what kind of corpus that I would have created? Remember that we have invested the same amount and the period is also the same. We earned the same amount, invested the same amount. For your retirement, you have accumulated a corpus of only 1 crore, growing at 7% every year. Not your earnings, but the amount you invested is growing at 7%. Well, wherever I have invested, the money is growing at 13% per annum. Right? End of 30 years of career, you have 1 crore on hand. You know how much would I have? You know how much I would have? I would have as much as 9.81 crores, my friends. That is, I'll be 10 times richer than you. Now, see the point? You earned the same amount, worked the same number of hours, invested the same amount. Somewhere we have invested. But because there is a difference in investing, in the place where we are investing, where I am investing in a better manner than you, the corpus that I have accumulated comes to 10 crores, while the corpus that you have accumulated comes to only about 1 crore. I'm retiring 10 times richer than you. What a difference. Isn't it a huge difference? Right? We have earned the same amount, but I am retiring 10 times richer than you. That makes a whole lot of difference in life, isn't it? Therefore, the most important thing is not how much we earn. In fact, the most important thing is where we invest, because that could make a substantial difference. Now, let me also tell you something very important. If you understand these two principles, these are the starting point of financial awareness. This is the starting point of creating and multiplying money in your life, my friends. The society at large, 99.9% of the society are not aware of this basic and important principles. That's the reason why they become secrets in the society. The first principle is to ensure that your money compounds. You don't keep anything idle, right? You don't keep anything idle. Compound your money. Don't keep your money. If you're earning about even for 500 rupees, 1,000 rupees, 10,000 rupees, it's your savings per month, or be it 10 lakhs, your savings per month, whatever it is, please get the money invested in the best of avenues. Don't keep your money idle, right? But let me tell you something very important other than this. In the previous slide, we saw that what Albert Einstein says is that compound interest is the eighth wonder of the world, right? He who understands it earns it. He who doesn't understand pays it, is what he says. Shall we interpret this a little bit? Something very simple and something that is applicable to you and me every day in our lives. What is that? As I said, take the past example. Let's say both of us go out and buy some vegetables. When you buy some vegetables, we buy it at a price of 100 rupees today. How much do you buy it for? 100 rupees. Now go to the same shop, buy the same set of vegetables when? Next year. Go to the same shop next year, buy the same set of vegetables. How much would it cost? 1 year from now. Would it cost 90 rupees? Would it cost 100 rupees? Would it cost more than that? It could cost more than that, isn't it? Because the value of vegetables always keep increasing, right? Value of vegetables will always keep increasing gradually. Therefore, The cost of vegetables will be as much as 110 rupees. Let's say 10%. Wouldn't your tomato increase 10% every year? Wouldn't your onion increase by 10% every year? Let's say 100 of this year, 100 rupees of this year is going to be 110 of next year. Right? This is inflation. This is what is called inflation, or in Tamil it's called Velavasi Vervu. Right? 100 becomes 110. What happens the following year? Now the 10% inflation applies not on 100 but on 110 for the second year. At the end of second year, 110, the same set of vegetables need to be bought for 121. Right? 100 becomes 110, and 110 becomes 121. End of third year, 10% applies not on 100 or 110 or 120. It's actually applicable on 121. So 10% of 110, 121, the same person has to buy the same set of vegetables at the same shop, has to incur 133 rupees. Right? It's going to be costing 133 rupees. Now look at this very carefully. If you and me have funds, let's say our parents have got funds on hand, whatever amount it is, the first thing that they will think of is to make something called a fixed deposit. Fixed deposit is an avenue which pays a fixed rate of return to the investor. So they will go to the bank, place the money in a fixed deposit, and how much the fixed deposit pays? It's about 5% per annum. Let's say the fixed deposit pays about 5% per annum. End of first year, they're going to be having corpus of 100 plus 10% is 110 rupees. They'll be having corpus of 110 rupees. Now, end of first year is going to be 110 rupees. End of second year, the corpus is going to be as much as on 105, apply 5%. It's going to become 111, right? Because 5% is not applicable on 105, it's actually applicable on 100. It's not applicable on 100, but it's applicable on 105. So the corpus becomes how much? 111 rupees. Now, in the end of first year, what is the value of fixed deposit on hand? 105, right? But how much do you need to pay to the shopkeeper? You need to pay 110 to the shopkeeper to buy the same set of vegetables, right? So buy the vegetables, you need to pay 110, but what you have on hand is only 105. The starting point is the same 100. Now people think that we have made a profit of 5 rupees in fixed deposits. We earned 5 rupees, right? Actually, we have not earned 5 rupees. In reality, we have lost 5 rupees. You know why? We need to make a payment of 37. We need to make a payment of 110 to the shopkeeper, while we have on hand only 105. Right? End of second year, 105 becomes 111 with fixed deposits. But with the expenses, it becomes 121. Right? Now the difference is as much as 10 rupees. It's as much as 10 rupees. Right? The third year, fixed deposit becomes 105, second year it becomes 111, and the third year it becomes 117. Right? But what is the value of the expenditure to buy the same set of vegetables? It's as much as 133, my friends. Now look at the difference. The difference is between, in the first year it was between 105 and 110, 5 rupees difference. The second year the difference was 10 rupees. The third year the difference is as much as about 18 rupees. That is the difference between 117 and 133. Right? One may think that you have earned about 17 rupees in fixed deposit, but it's not true. What we have lost is 17 rupees. That's what the truth is. Right? That's what the truth is. We have lost about 17 rupees in the process of earning this money. Right? So therefore, the cost of living increases at a particular pace, and the money on hand also grows, but it grows at much less than the expenditure. If we have invested in places or in avenues that fetch returns of less than inflation rate, right? Less than inflation rate. My friends, let me tell you something important. When I came out of college, when I finished chartered accountancy, when I was chartered accountant, my grandfather called me and said, "Hey, you please save money properly. Save money properly, right? And keep it in a place where you don't lose the money, right?" He told me, don't spend unnecessarily. Start saving a lot of money. This is what my grandfather told me. But my grandfather did not tell me to not only to save money, but invest it properly. You know why? The value of 100 is only 117 at the end of 3 years, but what we need to spend is 133. So our families and our education system teaches us to protect money itself, but it doesn't teach us, or should we not learn to protect not only the money, but the value of money? To protect not only the money, but the value of money, my friends. Do you see the difference? Protecting money is different from protecting the value of money. You need to protect the value of money in order to be able to retain the value and keep it ticking. Otherwise, what you have on hand, put it this way, shall I tell you what would be the value of money at the end of 5 years, 10 years? This is a formula for compound. You can see that there. You can Google and find it out for yourself. P into 1 plus R by 100 to the whole power T or N. That's a formula for compounding. You know what? Over time, you know what happens? Let's say it's going to be a costing, it's things as simple as Amul butter. It was costing 15 rupees in 2005. It's costing about roughly 50 rupees right now. In 2000, this was taken in 2018. Today it's costing about as much as 55 rupees. In 2030, it could cost as much as 130 to 150 rupees. So therefore, your money should also grow, isn't it? Otherwise, if it doesn't grow at the same pace as the growth in Amul butter, the value of your money depreciates. It goes down in value. How does it happen? So let's say 1 crore on hand at the end of 10 years is equal to only 50 lakhs. Get the point? Okay. When you are able to meet 1 lakh of 1 crore of expenditure in year 1, the same money will help you meet only 50 lakhs of expenses at the end of year 10. Why is that? It's because of the fact that this is the reason. The same thing in life, the standard of living is the same, the quality of living is the same, but the cost of living increases. The cost of living, let's say, is about 1 lakh per month. In year 1, at the end of year 10, the cost of living is as much as 2 lakhs per month. This is the law of nature. Everything keeps increasing. Value of everything keeps increasing. Right? So unless you grow your corpus, you cannot protect the value of money. This is the first thing that you need to learn. And lesson number 2 is that every 1% matters. People work very hard, earn that money, and keep it in savings account, right? Or they keep it in fixed deposits. Both of this do not beat inflation at all. So what is required to be done is to beat inflation. When you have beaten inflation, money, the value of money really gets protected. But if you don't beat inflation, what is beating inflation? 100 rupees in inflation rate in India, that is the growth rate of expenditure in India, is about 7.5% every year. So if 100 rupees expenditure next year is going to be 107.5, right? So the money value of your 100 rupees should also grow at 7.5%. In order to be able to protect the value of 100 rupees, forget growing the money. If you're able to grow the money to make it 112, about 4.5 rupees is growth, right? That's a real growth. And the first 7.5 rupees gets consumed in the increase in value of expenditure itself. I hope I'm making it clear. If you have any doubts, I don't know if you could stop me, and ask me any questions, or else you could come at the end and ask me a few questions. Right? So now understand this very well. These are the basic necessities of life: food, clothing, shelter. And after that, we go to the doctor to seek help. But it's also important to go to the proper professional financial advisor to be able to grow and multiply wealth, isn't it? People don't, in India, people don't do that. When I worked abroad, I have always seen that people take professional assistance in managing and multiplying money. But India, people then don't tend to do that. Maybe for the reason that there are not many professionals in financial advisory. Very rare. Your bank relationship managers, your LAC agents, your HDFC agents cannot be treated as your financial advisor. Financial advisor is a totally different role where they understand your entire gamut of all your savings, what you need for retirement, and then make plans accordingly to ensure that you achieve your important goals in life. That's financial advisor. Hi friends, you are in college, many of you are in college, some of you have qualified, very valuable professionals in the teaching profession. Please do not self-medicate. What does it mean? When I have a problem in my eye, do I operate it myself or do I go to the doctor? Right? I go to an ophthalmologist, right, to attend to my eye. Likewise, with money management also, go to a professional. Do not try to manage it yourself. It will make a difference for you. And that profession should be unbiased. Should have deep knowledge. He should be professionally qualified to advise you on all these matters. Therefore, he ensures that you don't make any mistakes in your life. He walks through the path with you, walks with you for life, and ensures that you don't make mistakes. So, without lack of planning, you tend to make much more payment of much more taxes than what you do otherwise if you have proper planning in place. It's very important to plan your earnings, plan your investments well ahead. Now, with this background, I hope you have been traveling with me in the last few minutes. If you had traveled with me, you would have understood the fact that it's very important to grow the money at more than inflation rate, right? That's point number one. And point number two, when you're growing money at more than inflation rate, the additional 3, 4, 5% earnings that you are going to be earning more than inflation rate it's actual growth that you will achieve in your life. If you're growing money at only 4% per year, you're losing about 3.5% every year on account of inflation. Right? This is something that we need to understand. Therefore, grow your money at well more than inflation rate. Right? So take a look at the screen here. We're going to be talking about these important assets that are available for investment. So, where do we invest the money to ensure that it grows at more than inflation? Let me tell you something. This important fact that you see here, you see the chart. You see the chart. There are two things. One is the fixed income investments. The other is higher yielding avenues. So, what is fixed income? Fixed income is one where, irrespective of what happens to the external markets, to the external world at large, you will continue to earn your fixed income. Right? That's fixed income. Fixed income are usually popularly known to be fixed deposits and insurance policies. But in reality, bonds and debentures of large corporates in India, large companies in India, it's not government, but large corporates in India, fetch returns of much more than fixed deposits. For example, a fixed deposit is fetching interest rate of about 5 to 5.5%. The bonds and debentures can fetch interest rates of as much as 8.5%. Bonds can fetch returns of as much as 8.5%. That is literally 60% more than the returns in fixed deposits. That's bonds and debentures, as you can see there. In the screen, you have assets that we manage, and comes fixed income. Under fixed income, you have bonds and debentures, fixed deposit, and insurance policies. You should stay away from fixed deposits and don't lose yourself in unnecessary insurance policies, which is not going to fetch you returns. These policies of endowment policies and money back policies are issued by companies such as could be HDFC, ICICI, Kotak, could be LIC, could be any other company. Don't go for endowment back policies, money back policies, or ULIPs, unit linked insurance plans. Right? These are avenues which will not grow your corpus. Go for bonds and debentures for the proper fixed income investment. Right? So it's again coming to high yielding avenues. What is high yielding avenues? Avenues that can fetch returns of well more than 11% or well more than 10% is what high yielding avenues are all about. So, what are these high yielding avenues all about? These avenues are investments which could be volatile, but perhaps can grow at about 30%, 40% also every year. Meaning that every 3-4 years or every 3 to 5 years, the corpus can double. That's what high yielding instruments, high yielding avenues are all about. These avenues include these important investments which are managed portfolio of stocks, mutual funds, structured investments in real estate, business finance, and last one is investments in unlisted companies and startups. Right? This is the last investment that one can make. Now, what are these? Each of these avenues? Let's quickly run through them. This will give you a lot of financial awareness. My friends, please take a look at this chart. Look at this. This is RBI data. What does this show? This shows the fact that in India, in every household, it could be your home, my home, it could be anybody else's home, properties are as much as 60% of people's net worth. Do you agree with me? If your family's net worth is, let's say, about 2 crores, but 60% of the entire 2 crores is locked up in properties. Right? It's locked up in property. Gold constitutes about 11% of overall assets. Bank deposits constitutes about 5.5%. Bank deposits about 16.1%. So therefore, if you look at the entire picture at large, you should realize that properties, gold, insurance policy, that is endowment policies here, will not beat inflation. Gold alone can be at par with inflation. Gold prices have gone up significantly. It has come down again. Gold will beat inflation during the time of financial crisis. It never beat inflation other than that. For example, between 2013 and 2019, gold prices remained stagnated. Between 2019 and 2021, gold prices have gone up by about 40 to 50%. Right? Therefore, invest in gold only as a hedge against a market fall, against a fall in financial markets. Right? So therefore, if you look at this entire picture, the growth rate in the assets, growth rate in these investments in properties, gold, fixed deposits, insurance policies, and cash is less than 5% per annum. Less than 5% per annum. People over time have realized that it's important to grow your money at more than inflation rate. Now it's fetching returns of less than inflation rate. Therefore, my friends, these assets should be trimmed, pruned, or even avoided in one's life to ensure that your money grows at more than inflation rate. Right? So let's quickly run through a few other thought processes. Then we will open the floor for a few questions. Invest in your own business. We can talk about it later, but just to get a sense of what this is all about. See, there'll be there could be several questions in your mind. May please ask them at the end of this conversation. Right? Now, what is real estate? Real estate is nothing but investment in apartments, investments in land parcels, or investments in commercial real estate. These are all investments in real estate. Shall we take into account what's happening in the real estate market? Look at the chart, is very interesting. You can see the rental yield in properties across different countries, from Singapore to China to Greece, Australia, the USA, Italy, so on and so forth, and until India. So what is this rental yield? Let's say a property is fetching a rental of about 20,000 rupees per month. That is annually 2.4 lakhs. Now the value of that property would usually be about 1.5 crores. That is, if you buy a property for 1.5 crores, you can lease it out and earn money, start earning money at about 20,000 rupees per month, which is equal to about roughly about 2.4 to about 3.4% per annum on the value of the investment. Right? On the value of investment, the rental yield is only about 2 to 3% in India. You can see that there at the bottom. The rental yield is about 2.2% per annum. I hope I'm making myself clear. But in India, what is the cost of borrowing? The cost of borrowing is as low as, or in fact, as high as 7%. If you take a home loan, the cost of borrowing is about 7%. Now, what is the rental that you're going to be paying? If you don't buy a property, you're going to be leasing the property. The rental that you're going to be paying is 20,000 rupees. But if you buy a property and the home loan rate is 7%, what does that mean? 7% minus about 2.5%, there is a loss of about 4.5%. Isn't it? Does it make sense to you? Right? Forget this matter for a moment, but go to other countries. Singapore. In Singapore, the rental yield is about 2.8%. But what's the rental yield is 2.8%, right? But what's the borrowing cost in Singapore? The borrowing cost is as low as 2%. So borrow 2% and invest in a property to fetch about 2.8%. It makes sense. But in India, you're borrowing at about 7% or 8% or 9% and investing in a property to fetch a rental yield of only 2.2%. Does it make sense to you? Right? So it's not worthwhile investing in real estate, that is particularly apartments. Of course, the prices have gone up significantly in the last several years, but we should also understand as to why the prices have gone up. The prices have gone up not because of the fact that you and me were buying or our family members were buying. It went up on account of the fact that this was the easiest place where the black money could be dumped. Get the point? That's the reason why the real estate prices have gone up, have skyrocketed from 1998 to 2013. But from 2013 onwards, that is, in fact, it has gone up from as much as 10 times, 20 times, 100 times also, right? It has gone up significantly. But as black money started getting curbed in the economy, that is, it went down, the money in circulation also reduced, right? Therefore, the real estate prices are not gone up. Let me tell you, my friends, understand this well. The value of real estate is it's not going to appreciate from here. In fact, it's going to be depreciating in the sense that it's going to be less than inflation rate. Therefore, the best place to invest, this is an example of what happened in the US economy. In the US economy, in fact, somebody had invested about $100 in Dow Jones. Dow Jones is the top 50 companies or the top 100 companies of the US. So if somebody had invested in Dow Jones, the $100 has become as much as $30,000. That is, investing in Dow Jones means distributing your money across different companies such as Apple, Amazon, Google, so on and so forth. It would have become about as much as $100 has become $30,000. But if you had invested in a real estate property in the US, $100 would have become $161. Do you see the phenomenal difference? Look at the end point. It's about $161 investing in few properties, but it's as much as $30,000 if the money was invested in the businesses, the best of US businesses. So the point that I'm trying to make here is that it's very important that the money is invested in the best of businesses in order to grow the money at more than inflation rate. Right? The best of Indian businesses. Now, am I asking you to do a business? No. Is it what I'm asking you to do? No, that's not what I'm asking you to do. So let's understand that little bit as to what I'm coming to tell you. I'm doing business, right? You don't need to do business. You can invest in business and earn that money. So before that, let me quickly run you through fixed income options. So we talked about fixed income, right? So what are the best of fixed income options? My friends, please understand this. All these things, these are the things that are going to help you go up in your career. These are the things that are going to help you in growing and multiplying your corpus. So fixed income is a thing where you earn fixed returns on your investments. That's fixed income. In fixed deposits, if you're parking 1 lakh, the value of the fixed deposit after 10 years is 73,000 only, not even 1 lakh. How is that? Because about 7% gets wiped out on account of inflation in India, right? 7% is taken out. So 100 has become 93 to start with, right? Every year 7% is taken out. That be the case, then actually you're losing money, not gaining money, right? Because fixed deposit interest rate is only 5%. Now, what one should do is that instead of investing in fixed deposits, if you're investing money in bonds and debentures are also fixed income avenues, but they will fetch returns of almost about 60 to 70% more than fixed deposits, right? Fetching more than 60 to 70% more than fixed deposits is a substantial difference, right? That is 8.5% or 8% is the return on bonds, while return in fixed deposits is only 5.5%. You see the difference. So if you want fixed income, invest in bonds. Highest of safety, no lock-in period. You can take out money when you want, right? And it's safe and secure. Now, don't invest in fixed income. You should be investing in businesses, and you should be ensuring that the money grows at more than inflation. Therefore, don't lock your money in properties. If you want fixed income, go for bonds and debentures. Now, this is something important. Now, if you look at this, these are the varied kinds of bonds, varied banks, varied institutions who have issued bonds. Now, factors to be considered. These are the varied factors that we consider while analyzing bonds and debentures. It could be a little technical to discuss all these matters. Now, we talked about real estate. We talked about fixed income, isn't it? How much of fixed income is required for every individual? Everybody needs fixed income, right? That's important. But if you are going to be investing in fixed income, you will not be growing your capital, because growing your capital is different from fixed income. Will fetch you about 8.5%. Inflation is 7.5%. It fetches returns of 1% more than fixed income, right? That's the only thing. But you should be growing and multiplying your corpus. How does it happen? Please look at the slide. It will happen by investing in others' businesses. If you're going to be investing in others' businesses, perhaps it could be your own business also, if you can do business, right? If you're in business, invest in your own business, grow your money. But you don't need to, because there are fantastic business houses, there are fantastic companies around where you can invest your money. You don't need to run your own business. My friends, let me cite an interesting example of Mr. Warren Buffett. Have you heard this name? Has anybody heard this name, Warren Buffett? Warren Buffett is one of the most richest person in the world. You know what he did to become rich? Did he do any trading? Did he manufacture anything? Did he run a software company? Was he a lawyer? Was he an auditor? Was he a doctor? None of this. He was not even professionally qualified. He was not as qualified as you are going to be once you finish law. But how is that? He has made a lot of money. You know what he has done? He started with about $1,000 only. Today, you know how much his net worth is? It is as much as $200 billion in a matter of about 50 years. Of course, it has taken quite a long time. Even enough 15 years also, 20 years also, his net worth was running into several billions of dollars, while his capital is only $1,000. Doesn't it make something fishy? You know what he has done? This is what he has done. In America, if you read this sentence, this is the secret behind Warren Buffett's wealth creation ideology. In America, if you bank, fly, shop, or drive, or make a payment, there is a good chance that you're using a brand at least partially owned by Berkshire Hathaway. Company owned by Warren Buffett. My friends, here is a secret for you. You know what he did? Take the example of Warren Buffett. If in America, you're going to be spending about $100 in America, about let's say you're going to be paying paying in gasoline pump. Here it's petrol, there it's gas. Gasoline pump, or paying money in hotels, or going out for a movie, whatever it is, right? Or making the payment for your all your regular expenses such as electricity, so on and so forth. What do you do? In America, if it's going to be Walmart, if it's going to be any other institution, or even swiping the card, if you spend $100, 0.001 goes to Warren Buffett's pocket. He might be spending money elsewhere, but 0.001 goes to his pocket. How is that? His money is invested across different assets. You know what he has done? He is not well read, he is not qualified. He had only $1,000 in hand, but you know what he did? He invested his money across multiple businesses, which are not run by him, which are run by some of the best of managements in America. But he spread his money across these businesses. You see his portfolio, you see where his money is. He's invested in Apple, he's invested in Wells Fargo, he invested in Coca-Cola, in American Express, in several companies. With that, what happened? The money that he invested grew and multiplied several folds. It multiplied by thousands and thousands of times over years. When it happens, he has created huge amount of quantum of wealth. That's what he has done. Can we imitate that in India? Here is a simple example. Just follow his principles and imitate in India. And let me tell you this, that we have not imagined something and written here. These are all real context of things. This is all reality. If you are going to be using fan, and just look up, there'll be a fan, right? That should be one of these Havels, Crompton Greaves, Bajaj Electrical. If you own a car in house, it could be Maruti, Mahindra, Tata Motors. But if it's going to be car battery, there are only two companies in India today. One is Exide, other is Amaraja. If you're going to be buying shoes or slippers, you'll be going to Relaxo, Bata, Liberty, right? Cardum, one of these companies. And so on and so forth. Keep moving. If you're going to be painting your house, then you'll be using Asian Paints, Berger, or Kansai Nerolac, a couple of more. Now, friends, we are talking about big brands in India, right? You know who owns these brands? Very large companies. You know something very interesting? You might have seen your parents struggle in business. You might have seen people struggle in business due to COVID, due to varied things that happen in the economy and also in their life. But these companies, irrespective of whatever, have grown at more than 15% per annum. In the last 15 years, they've grown at more than 15% per annum. So what does that mean? It means that they have multiplied capital several folds. Right? They have multiplied capital several folds. Right? Just look at the next slide. Aren't you using washrooms every day? Aren't you brushing your teeth? So long as you need to brush your teeth, Colgate will do it. The company Colgate will do it. So long as you need to use soaps, the soap companies will do it. So long as you need to use cookers, cooker will do it. Life goes on like that. Understand the principles of Warren Buffett and implement that in India, meaning that you're going to be investing across the segment of several things that you're using every day in your life. Can you live a day, even a day, forget a week or month, can you even live a day without consuming something of Hindustan Unilever, Colgate, and Dabur and Gillette? Fantastic pair. You cannot live a day without these things which are part and parcel of our day-to-day lives, isn't it? So let's say, for example, TTK Prestige, the company has grown by about several leaps and bounds. The company has grown, right? what I'm trying to point out here is that there are about 67 companies, 67 large brands in these two slides. All these brands, all these companies have grown by more than 15% per annum in the last 15 years. In the last 15 years, they have grown by more than 15%. So what we need to do is to stick to these large companies. 50 days, invest in these companies, or invest in these companies ideally through mutual funds. That will help you grow your money several folds. Shall I find an example? So here is an example of a person who runs a shop. He runs a shop, right? He runs what kind of shop? He's running a small hotel. In his hotel, he's generating cash. He was keeping cash in his, this is a friend of mine. He is also one of our investors. He was earning money, keeping my cash in his cupboards, and he was not doing anything with that. Now, you know what we did? We asked him to deposit the money in his bank and started investing that money regularly, something as simple as mutual funds. Look at the corpus that he has accumulated. He has accumulated about 67 lakhs of corpus. That's in his name. He's accumulated another 70 lakhs of corpus in his wife's name. This is very important to understand this. Please look at this particular thing that is highlighted in green. Are you able to see that? There you can see returns of 36.28%. His money has grown at about 36% every year. It has grown leaps and bounds, right? You know, all that he did, he trusted us with that money. He trusted professionals and gave that money to professionals to manage. When you go to a doctor, you go and tell him, hey doctor, I need some medicines. Please give me erythromycin. Please give me Clozin. You're going to be telling that medicine to the doctor. Why do you need to go to the doctor? Let the doctor do that diagnosis. Let them do the analysis, and finally tell us what we need to do. Right? We just take those words and implement that. Likewise, in fund management, money management also, very important, take the advice of professionals and invest. This is an example of investments in another account. About 50,000 rupees back in printed. Okay. See, look at this. This money has grown by 36%, is grown by leaps and bounds. Now look at this particular slide. This is investments in stocks. So this is investments in mutual funds. It has multiplied several folds. Now the next slide is investments in stocks. This is multiplied by it has grown to about, these are all portfolios of some investors for whom we are managing money. It has grown to about 4 crores. The returns are about 62% every year. 62%, my friends. Every year return stands at 62%. Right? In the previous slide, you saw about 36% returns. Now, these returns are possible when you're investing in the best of Indian businesses. But if you're keeping money in your fixed deposits, if you're keeping money in your insurance policies, if you're keeping money in gold or keeping money on hand, none of this is going to happen. Invest money appropriately and grow and multiply your money. When you do that, I'm telling you, there's no end to the kind of wealth that you can create. Let's put it this way. If you're investing in good businesses such as Hindustan Unilever, or you can see Page Industries here. Page Industries is, there is something called, what kind of innerwear all of us use? It's jockey or nothing, isn't it? Jockey is manufactured by Page Industries. You know what? It has grown by 69 times in the last 10 years. 69 times. I'm talking about the stock price. So stock price, the value of the company has grown by 69 times in the last 10 years. Right? Let's say you had invested about 1 lakh there. Today it's about 69 lakhs. And there are so many such stories, not 1 or 2 stories. Let me tell you, there are 100 such stories today also. And that's going to happen again and again and again. The reason why it happens is that the profits of these companies are growing and multiplying. And why are these profits growing? Because of the fact that you and me consume Dabur soap. You and me consume Hindustan Unilever products. You and me use this Maruti car. You and me use a TVS bike. You and me use a Hero Motors bike. So all these things have all grown because of the fact that we are using these brands, right? That's the reason why they have grown. And that's the reason why they have made profits. Since they have made profits, since the profits have grown and multiplied, the company's values have also multiplied. There is something very simple that you need to do. Just write down these best of businesses. You don't need to do a business. During COVID, you know what we did? While unfortunately, there was a lot of loss of jobs, loss of employment, losses in businesses. But you know what we did? We invested in pharma companies in India, right? Pharmaceutical companies in India. I don't need to run a hospital to make money in COVID, but I invested in the best of hospitals. For example, Apollo Hospital, Fortis, money multiplied by about 3 times or 4 times in the last 1.5 years. I'm not talking about 10, 20 years. Money multiplied by as much as 1.5 times, 2 times. My friends, the best way to grow your money is to be part of the best of Indian businesses. And you don't need to invest it directly yourself. Be part of, invest it through mutual funds and seek the advice of the best of advisors, finance professions, right? So what kind of return this has given is something amazing, right? But this is never without ups and downs. Let me also tell you that in the last 20 years, I have never lost money in stock markets or any of these investments for the given reason that we spread our money across multiple businesses. Even if one business does not do well for a period of time, the rest of every other business will do very well, right? We have never lost money. If you have to go through the right channels to understand that, or read and do that to yourself, or else go to the right set of professionals, they will help you do the right thing. So there is no way money can be lost, but there's a lot of volatility. What does volatility mean? Volatility is this. You can see the chart. When I started in today, we talk about, you would have seen in papers, my friends, you would have seen the word Sensex, right? You would have seen the word Nifty. What does Sensex mean? What does Nifty mean? Nifty is nothing but the composition of the top 50 companies of India is Nifty. The composition of the top 30 companies of India is Sensex. When I started investing, today the Sensex is standing at a value of about 60,000 odd, around 60,000. About 20 years back, Sensex was standing at about 2,500. It is multiplied by about as much as 30 to close to 25 times. 25 times it has multiplied, right? Such a multiplication happened in the last 20 years. So if I had about, let's say, 10 lakhs invested, today the value of that is about 2.5 crores. But staying there is important. Not taking out money, not taking regular income. Stay and grow and multiply your corpus. So what will happen is that when you build the corpus like this, at the time of retirement, this corpus will help you meet your retirement. So can we see how to manage your retirement? Here again, I'm going to show you something very relevant and something that we have done for all our clients to get them peaceful retirement, to have them happily retire. It's something interesting. So there was one gentleman who came to us several years back. He didn't have much money on hand, but he had to retire at some point in time. So for the retirement, he needed a sizable corpus, but he didn't have that much of corpus to retire, right? So here is a slide that I'm going to put up for you right now. So I'm going to change the slide sharing to show you how we got one of our clients to retire happily. So this is how it is. Now you can see the screen, I hope. You look at this very interesting thing. This man had a corpus of, this is not fiction, this is not science fiction, this is not financial fiction. This is reality. The statement of investment of a particular friend of ours who's also a client. See, 1 crore invested in November 2011. 1 crore invested in November 2011. Since this gentleman wanted regular income to meet his livelihood, we took out about 62,500 rupees per month. You can see the number there. In column E, you could see 62,500. And this is in column B, you can see the dates. So every month, we withdrew 62,500 rupees. Every month. Starting from 2011. 62,500 per month is equal to 7.5 lakhs per year. The logic is that in fixed deposits in 2011 was fetching about 7.5%. So we decided to withdraw an amount equal to fixed deposits on a monthly basis for his sustenance and livelihood. Right? This is a retired person. So he has accumulated a corpus, so we turned it around, use it for his retirement. So monthly basis, 62,500, 6.25%, annually 7.5%. 62,500 was withdrawn on a monthly basis. We can see that there. So you can see the dates of withdrawal also here. Every month. So March, this is September, and this is October, November, December, right? 2012. It goes on like that. Now 10 years went by. We are managing the money here. We are managing this investment. 10 years went by. After 10 years, he is withdrawn 75 lakhs. Right? on a monthly consistently he has withdrawn this money. He has withdrawn 75 lakhs. After withdrawing 75 lakhs, he has invested. Do you remember that he invested 1 crore in 2011? 10 years, he has withdrawn 75 lakhs. 75 lakhs. Now, standing in July 2021, he came and met us, right? When he came and met us, you know how much he had after withdrawing 75 lakhs? 1 crore invested, 75 lakhs withdrawn. You know what could be the balance? One can say it could be 25 lakhs or maybe 40 lakhs. It could have grown also, right? Let's say 40, 50 lakhs, right? You know what it was? At the end of 10 years, after withdrawing 75 lakhs, the corpus stood at 2.37 crores. Let me repeat that this is not fiction, this is reality. The statement of account of one of our investors. He had 2.37 crores in his account. We made this investment for 10 years back. So what does this mean? The money has grown by more than 3.2 times. But he has consistently withdrawn the money while it has also grown. Right? It has also grown. Now, when he came to us in July 2021, he said, sir, 60 to 500 is not sufficient for me anymore. I need more money for retirement. How much was it? He said, maybe 1.5 lakhs. So you know what we did? Earlier, we applied 7.5% on 1 crore, right? Now, we applied the same 7.5% on the money on hand right now, which is 2.37 crores. It came to 1.48 lakhs. So, today, from July 2021 onwards, we have been withdrawing 1,48,000 rupees from the investment and giving it to him. Now, he asked us this question. Now, it is okay now, for now. But what will happen after about 5 years? Because after 5 years, my expenditure will not be 1,50,000, but probably it will be about 3 lakhs. What will I do now? What will I do then? Answer is simple. If it has grown from 1 crore to 2.37 crores, even after withdrawing 75 lakhs, this 2.37 crores in about 5 years will possibly become about 4 crores. At the end of 5 years, we'll increase this 1.5 lakhs of withdrawal, monthly withdrawal, to make it about 2.5 lakhs. Right? Every 5 years, we'll do a revision in withdrawal. This is what we decided, and this is what we are executing. Now, you know how this happened, what this investment is all about. This investment is in a mutual fund scheme, and this particular mutual fund is investing in the best of Indian businesses. So it's very important to choose the right investment option and get your money invested there. Then enjoy the journey. Find the best of financial advisor, find the professionals. First of all, learn the concepts yourself. You cannot do anything. When you go to the doctor, he may operate your eyes, but if you got cataract, understand what cataract is all about. You don't need to operate yourself, but understand what it is. That's what financial awareness is all about, right? Now, this is the way retirement should be enjoyed. Retirement should be enjoyed by taking out money on a regular basis, but also growing your corpus, which both should happen at the same time. And that's a benefit that you can derive when you invest in the best of Indian businesses through mutual funds, right? So what are the best of Indian businesses that I'm talking about? It could be, where do if you, let's say, once you finish your course in law college, many of you would like to get placed in some of the best of law schools, or perhaps in an IT company as the legal advisor, right? If, let's say, you're going to be employed with Infosys or TCS, or going to be employed with Reliance Industries, a manufacturing company. So in technology sector, there are companies, very big companies such as Infosys, TCS, right? HCL Technology, Wipro, quite a few others. These companies have grown by more than 15% in the last 10, 15, 20 years. Likewise, take the banks, HDFC Bank, ICICI Bank, Axis Bank. All these banks have also grown by more than 15% in the last 10, 15 years, right? So these are the set of business, oil and gas companies, fast-moving consumer goods, such as Hindustan Unilever, Dabur. All these companies around us have grown by well more than 15%. You know why? Because you and me consume that every day. If you understand this logic, that you and me consume it every day, you and me use those services every day, you and me use their products every day, and that's the reason why that they have grown. If you understand this philosophy very well, you will understand that you can never ever lose money by investing in those businesses. Let me ask you one thing, my friends. What is risky? Is it risky to run your own business, or is it risky to invest in the best of businesses? Understand my question? Is it risky to run your own business, or is it risky to invest in the best of businesses? In reality, investing in the best of business is much less risky, isn't it? Why is that? Because if you have to run your own business, you need to build up a team first of all. You need to build up a team. You need to have your systems in place. But if you're going to be investing in somebody else's business, which could be Infosys, could be TCS, it could be Reliance, it could be HDFC Bank, you don't need to worry about it because they've already got everything in place. Just ride along with that. Can you not make money? Can you not multiply your money? My friends, I have made a lot of money. I'm not speaking at the income tax office here, so let me tell you that. Let me share my life experience. Today, people like us can retire. How is that? I'm not too old to retire, but I can still retire. I have not earned a lot of money by working hard, but people like us, we have seen money by investing properly. And that's what we're trying to share with you. I don't make money by sharing these ideas with you, but I wish to enrich your lives by doing this. And we believe that this is a service that we do to the society by creating financial stress away from people's minds. You could also become rich. You could also take care of your family, your retirement, your children's education, your children's marriage. You could also become rich. You could also achieve financial freedom by investing your money properly. Let me go back to the basics. Money, it's very important to grow your money at more than inflation rate. What is inflation rate in India? It's about 7.5%. It's very important to grow at more than inflation rate. That's number one. Number two, please understand that for growing money at more than inflation rate, there's no point in throwing your money at some bitcoins or some unknown stuff. Invest it very, very carefully. Don't lose money. When you invest in the best of Indian businesses, you don't lose money. Number three, avoid all investments that grow at less than inflation rate. What are they? We saw that in one of the slides earlier, that investments in these asset classes, you can see at the bottom, that is fixed deposits, insurance policies, or you could take a view of this particular slide, which is, perhaps people get qualified from college, go to employment, immediately they take an LIC policy because one of your family members is an LIC agent, right? Avoid all that. Don't invest for others, invest for yourself. Don't do the stupid stuff of taking an endowment policy and spending a lot of time and energy investing money over there. Or else once you get married, when people get married, they buy an apartment and pay home loan for the rest of next 15, 20 years. Don't do that. I'm not saying you shouldn't buy an apartment. You can buy an apartment, you can have a fantastic house, that's a different matter. But very important to invest your money in a manner that it grows at more than inflation, because the fact is that the value of apartments do not grow at more than inflation. It's a depreciating asset. In the sense, last 7 years, the apartment value of apartments have not grown. Right? Almost stayed at the same prices in Chennai and other metros. So that's principle number 3. Principle number 4, please seek the advice of a proper finance professional. Don't do it yourself. Don't try to do things yourself. Please take the assistance of proper good financial advisors. These financial advisors would never be your bank relationship managers, would never be your agents. Right? You need to find a professional to advise you properly. Right? You can do that. And number 5 is what I'm going to tell you finally. And with this, I come to the end of the session on financial awareness. This is what I'm going to tell you. It's very important to cover the risk, cover the downside. What if things go wrong? Right? Haven't you seen a sudden demise of a relative or a friend of yours, or somebody known to you? Right? So, or haven't you seen somebody having cancer, some unforeseen circumstances where a health issue caused a huge amount of expenditure? Therefore, protect yourself against the expenditure coming out of health issues. That's what is called health insurance. And cover yourself with proper life insurance. Life insurance is not equivalent to LIC policy. It's not equivalent to endowment policy. It is what is called a term insurance. It's called term life insurance. Go for term life insurance. Have a good health insurance in place. Invest rest of your all money in good investments and make a lot out of it. We can go on talking about it, but you could watch out for our YouTube channel where you'll have a lot of videos The name of this YouTube channel is Inspire by Sincere Syndication. INSPIRE by Sincere, SINCERE, Syndication, SYNDICATIY. Inspired by Sincere Syndication. You could go into that, and you'll find a lot of videos there, a lot of very interesting videos. I'm sure those are videos which will transform your lives. Do watch them. If you have any queries, you can always write to me. And ask your questions. I'll also type in our landline number here, which you could make note of. You could give us a ring if you have any doubts, or you could write to me also. Let me give you my mobile number here. This is my number. You have my number, you have my email ID. So this session is entirely oriented towards creating financial awareness. I hope it achieved a little bit of its purpose. If you learn these secrets towards creating wealth in society, creating wealth for yourself, let me tell you, my friends, your life is going to be financially stress-free. Start early and start investing early. If you have any clarifications, you can write to us, or do watch out for our YouTube channel, Inspire by Sincere Syndication. You'll find a lot of very interesting videos there. Fantastic. I would be happy to take any questions if you have. Velmurugan, could you unmute?
Yes, sir. Yes, sir. Participant, you may feel free to ask any question regarding our presentation, or your question may be confined to investment saving.
Sir.
Yeah.
Wonderful presentation, needs. It was a need of an hour. First of all, I really appreciate Velmurugan sir for organizing such a wonderful webinar, timely for all the people who are actually struggling to find a good investor. So can you throw a light on how to identify a best investor? Where actually, you're talking, there are so many people who come up that we will be trying to help you out in doing all these things. How to identify the best?
Talk about best investor as in you talk about best financial advisor.
Financial advisor.
It's while it's not a difficult question to answer, it's not an easy question to answer too. For the reason that it's like asking, how do you find the best of doctor? Right? There are thousands of doctors. Well, I'm not derisive about any profession here. There are very good people in every profession. I'm sure there are fantastic doctors around. I have a lot of doctor friends, but it's also the fact that there is a very small proportion of the small percentage of medical professionals that exists in every world, and I'm sure there are quite a percentage. My father is a lawyer by profession. He's senior lawyer in the High Court of Madras. His name is S. Raghavan. He's been practicing for the last 40 years. So I'm a chartered accountant. He's a father. In every profession, there is a set of people who become very commercial, in the sense that they do things not in the best interest of the client or in the best interest of the patient or the investor, but they do it in the best interest of their own selves, right? So therefore, in financial advisory services too, take the case of bank relationship managers. I'm sure I would have met about 30-40 relationship managers all through my life. I'm sure you would have done that also. Do they advise in their interest or in our interest? They call up and say that, well, sir, madam, there is a fantastic insurance policy that has come up, please invest. You want to make a fixed deposit. Every single thing that they pitch to us is relating to something that fetches them income. This is honest feedback. For the matter, the same could be the case with insurance agents. Have they one of them ever come and asked you, how many children do you have? Have you planned your retirement? They wouldn't ask for that because they're not bothered about ourselves, but they are bothered about doing something for their institution or for the company that they work for, so that they can earn incentives. I'm not blaming them because that's how the system works. To answer your question straight, you need to find your own people. Very hard to say. From heart, we can say that today we manage funds of about 800 crores odd. We manage funds of about 850 families. We have been very good at what we have been doing, but I cannot tell you that we are the best in the country, though we may be. But I cannot tell you that it's about talking about ourselves, right? So you need to find your own set of people. You could reach out to us. You could write to us. I have published my number in the box there. You could see that there. You could reach out to me or to connect with one of my colleagues. You could have a conversation and understand more about it. That's what I could say to answer the question.
Wonderful, sir. Thank you so much.
Sir, this is Uma Maheshwari. Can you highlight something about, tell us about Bitcoin, sir, investing on Bitcoins?
Okay. Okay. So I will tell you something interesting about Bitcoin, but I'll also do one thing. I'll also publish a video here. I hope I'll be able to take out the video to show it to you. Well, in summary, there are many, when you buy a property, there is an income coming out of the property, right? There is a rent coming out of the property. When you buy a stock, when you buy a mutual fund, there is also an income underneath. That is company earns profit is income, right? But with coming to Bitcoin, is there any income that the Bitcoin generates? Does it generate any income? It doesn't. It doesn't generate any income as such. But if there is an object that doesn't generate an income, can it be called an asset? From an accounting principle, from financial principle, an asset is one which generates some income. So this is something that doesn't generate an income. So it should not be called an asset. But it's an asset because some people are investing, it's growing, it's an asset, one can say. So sum and substance is that it negates the principle of being an asset, nor is it pure expenditure. Right? It's some phenomenon which is the reason why it goes up, reason why it comes down. Is there a logic? So for let's say a property price to go up, there is a logic because the rental value increases. For a stock to price to go up, there is logic because the profit of the company has increased, right? But for Bitcoin, can you put any logic to that? There is absolutely no logic as to why the Bitcoin price is going up. There is no logic as to why the Bitcoin prices are going up on a day or going down on a particular day. It's entirely purely a speculation. Therefore, well, it's a speculative asset to invest upon. If one is willing to bet on speculation, it's like putting your money on the horse, right? If you're willing to do that, then you could definitely set aside some portion and this is money I'm putting on the horse. If it comes, it comes. If it doesn't come, it's okay. So if you think so, then you can do that. Otherwise, it's better avoidable. So why do you ask about Bitcoin? The reason you're asking about Bitcoin is the fact that you want to grow and multiply your money, right? You don't need to take the risk of losing money in order to earn money. The simple solution, we have all earned money and we have multiplied money. I'm not reading a book to tell you all this. I have done this in my life. I have seen this in the lives of several hundreds of investors for whom we manage money. We have done that not by speculating money. We not invested money in a horse, but we invested money in the best of businesses. That also grows and multiplies your money, but you don't lose there at all. You don't lose your money, right? You don't lose your money at all. Therefore, the best way to grow and multiply your money is to invest in best of businesses. But if you'd like to speculate, well, if this comes, it's okay. Tamil சொல்லுவாங்க இல்லையா, வந்ததுன்னா பெருசு, சின்ன போச்சுன்னா பரவாயில்லன்னு சொல்லுவாங்க இல்லையா, அந்த மாதிரி. But if you're willing to lose that much of quantum, then you can speculate that amount alone for Bitcoin. Any other question? I have published a link on relating to a video on Bitcoin just now. It's in the chat box, so you could pick it up and see that link. Any other questions? You could unmute yourself and ask if you have questions.
The participants have sent their question in chat box, sir. Let me read one question,
Okay.
sir.
So you want me to read the chat box? So let me take about a couple of questions from the chat box.
Sir, yes.
So one question is how to believe in financial advice. Isn't it unpredictable and similar to astrology? One can become millionaire. Why would one share the secrets to others? Well, I don't know how many financial advisors, so-called financial advisors, become millionaires. I don't think insurance agents are not financial advisors, as I said. Relationship managers are not financial advisors. It's very hard to find them actually, good advisors. There are a few very good financial advisors in Bombay. And there are people like us who have been advising people genuinely, hard to find them. It's like, the question is like, astrology is a subject where everything is unpredictable, right? This may happen, that may happen, today rain may come, rain may not come. But investment is not like that. Investment comes with a lot of predictability. There's so much of certainty. There's uncertainty also. Tomorrow there could be earthquake in India. All of us may not be alive. All of us may be alive or alive. Everything's unpredictable, right? Tomorrow one may have an heart attack, right? So everything is unpredictable from that fashion. But if one knows the business properly, one knows things properly, it's quite predictable. Can you go to a doctor and say, doctor, if you're going to be operating in a heart, would I survive? Because everything is unpredictable. Everything, it's like astrology. If you tell the doctor like that, he'll slap you. Likewise, if for somebody who understands this properly, this is far more predictable. It's not predictable. It's not the way you think. I don't blame you for thinking like this, saying something like this, because you're talking about from what you have seen and what you know. But from what I have seen, what I have known, what we have practiced, I can tell you this is a lot predictable. It's not like astrology. It's not like throwing money on the horse. Investment in Bitcoin is perhaps throwing money on the horse, but a lot of certainty in businesses, certainty in investments. It's you can, without losing money, you can make money. Generally, women are interested in invest in gold and land. I think we saw that real estate as an asset class, gold as an asset class will give returns of equivalent to inflation, but it may not beat inflation over long periods of time. And let me also tell you that gold will grow during periods of recession. When the economies are not doing well, gold will do well. But the economies are doing well, gold will not do well. So between 2009 to 2013, gold prices went up about as much as 4 to 5 times in about 3-4 years. And from 2013 to 2019, gold prices went up between 2009 to 2013 because of the recession. If you remember the US recession, it went up. But in 2013 to 2019, gold prices stayed at the same level. 2019 to 2021, a recent memory, gold prices shot up about 50%. From 2021, beginning onwards until date, gold prices are not moved up. In fact, it has come down slightly because the economy has started doing well. So gold is an asset for difficult times. But anyway, we have gold at home, right? Women have gold at home. So you don't need to invest in gold. But if at all you want to invest in gold, you don't need to buy gold, physical gold. You can buy gold ETFs. Again, watch our videos on gold. It's there in our channel. It's there on our YouTube channel. Go to our YouTube channel and go search for gold videos. You'll find that. It's there. And there's a video in Tamil. There's a video in English. Likewise, there is a video on Bitcoin in Tamil and in English also. You can find that. The name of our channel is Inspired by Sincere Syndication. You can find those videos. The last question is, why is India going to ban cryptocurrency? Dear sir, cryptocurrency is not, madam, cryptocurrency is not banned yet. There's no such announcement. There's a lot of such speculation that cryptocurrency is going to be banned, but it's not banned yet. Therefore, but look at it this way. Cryptocurrency can be used as an asset, as a means for money laundering. That is, terrorists can move money from several countries back into India or India to other countries without paying taxes in any of those countries. Therefore, governments are all wary. That is, governments are all not happy with the context of cryptocurrencies, given the fact that it can be used for laundering money from one country to another, moving currencies globally. Right? That's the reason why governments, not only Indian governments, several other governments want to be very careful about cryptocurrency. So you can understand cryptocurrency, you can understand gold and other things that you asked for about real estate. In this channel that I have published, I have given the link there. You can go there. A lot of videos on financial awareness. You can see that and understand. I have answered these 3 questions. If there is any one other question I can take, or else we can conclude the session. Let's watch out for any one question. If there is any, I would like to take it. Well, let's come to the end of the session. Let me tell you something, what I have in mind. Whenever I meet my teachers, this is after about several decades of going to school. Even at this moment, when I meet my teachers, it brings tears to my eyes. I was telling Velmurugan also the other day that you are all the ones, I'm sure there are quite a few teachers around today, you are all the ones who have built character in us, in every one of us. Right? You are the society builders. Right? Students They find this little comical when I say this, but I'm sure they will realize this when they come out of college and take up their jobs, look back 10 years later into what has gone through them those 3-4 years of their spending their time in college. It is you who are building characters, you are all the society builders. Therefore, my pranams to each one of you for the wonderful work that you are doing. My pranams especially to Velmurugan, because what he has done today is phenomenal. He came to our office, came and met me. I obliged because what else can we do to teachers? What else can we do to students for their budding for the days ahead, right? So it's a great pleasure to interact with you, each one of you. If you have any questions, please feel free to write to me. Be happy to take it on. You could reach out to some of my colleagues in office too. Wonderful, Velmurugan. Thanks for organizing this. It's been wonderful interacting with all of you. Over to you, Velmurugan. I have published my email ID over there in the chat box. You can pick it up if you want. Thanks, everybody.
Hello, sir. I think there is some technical problem with Velmurugan, sir.
Okay.
Could not find him here. Thank you so much for being here in our institution. It is really wonderful hearing you. And I believe each and every participant present here would have really benefited out of your lecture. It is 100% going to be an eye-opener, sir. Thank you so much for being with us, sir. Thank you so much.
Thank you so much.
Thank you, sir. Thank you.